Good morning, friends. Welcome to Adda 24/7. Today's topic is very important from international trade perspective. We are in Achiever series, MCQ series, BFM module A, and the topic is risks in foreign trade. There are many risks available for foreign trade, but we'll be covering those important ones which are asked to you in exam and which are required in the daily life. Okay, so follow this video completely. Beforehand, download Adda 24/7 app on your mobile. In this app, you'll be getting all the premium study material, current affairs, job alerts, daily quizzes, also live classes for JAIIB, CAIIB and various banking exams, plus notes, question banks, also tests. So what all do you require for JAIIB, CAIIB and various banking exams? You'll get it over here only. Don't go here and there. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting two important things. One, the updates on JAIIB, CAIIB and various banking, all the latest updates, plus free YouTube series here. Free YouTube, whatever is available free on the internet, you should grab it. Okay, which is useful to you. You should go on watching everything, every songs and every fight scenes. Okay, go only for what is useful for you. So, grab this opportunity ASAP. Subscribe to this channel. Click on the bell icon. These are the two new batches for CAIIB. Just now started. You can go for these. If you have missed some videos, you can go for the recorded videos also. Topics are very difficult. Remember, ABM, BFM, BRBL and ABFM. There are huge discounts. I'll speak on that later. Let's start with the today's session. The schedule is what? The schedule is very easy. Meaning of the risks in foreign trade. What do you mean by the risk in foreign trade? Why is there a risk in foreign trade basically? Okay, types of important risks, and third is the objective questions. Okay, so let's start with the session. Meaning of the risk. Basically tell me, why is there a risk in foreign trade? Okay, I'll tell you 2-3 important points before going into the details as per your books. Okay, so I'll just cover a simple logical answer for this. The first is, we are dealing with two unknown persons, number one, because if you are doing a local trade, okay, then it's simple. You can go go anywhere, anytime and just catch that person. But if you are dealing with some foreign country, some unknown person, then it's difficult, number one. Number two, you are dealing with two separate countries. So the legal systems of those countries are different. The cultures are different, so that's why these two carry the main important risks. Okay. Also, there is an exchange rate problem. Exchange rate problem is heavy in various currencies. Okay. So that's why let's look at the definition of this. Meaning of the risk is, foreign exchange risk refers to the losses that an international financial transaction may incur due to currency fluctuations, right? So currency fluctuations is the main problem which we always face. Now this may be due to various aspects. Russia invading Ukraine, again currency fluctuation. COVID comes in, currency fluctuation. There is somewhere something happens, okay, outbreak, immediately currency fluctuation. So any single point in anywhere in the world causes the currency fluctuations. Okay. Foreign exchange risk can also affect investors who trade in international markets and businesses engaged in the import-export of products or services to multiple countries, isn't it? Means, suppose if I'm exporting to South Africa and something happens in South Africa, there is an uprising in, let's say, South African countries, Cuba, somewhere, anywhere. Okay. Ethiopia, there is an uprising, there is something wrong going on over there. So that can definitely affect my business, isn't it? So anywhere, if I am exporting something to Pakistan and something happens in Pakistan, I am exporting something to Ukraine, okay, and now there is a war in Ukraine. So these all factors matter to me if I am the exporter, number one. Number two, they matter to me if I am the trader in foreign currency. See here, there can be a trader who is not an exporter at all, but he is just trading in the currencies, he or she. So if he or she is trading in the currencies, definitely in that case the trader will also face the brunt. Okay. So what are the types of risk? We'll cover 2-3 important ones. Number one, exchange risk. It is the most common and obvious risk in the foreign exchange dealing operations and arise mainly on account of fluctuations in the exchange rates and or when the mismatches occur in the asset liabilities and receivables or payables. So exchange risk means what? Exchange risk means basically the dollar to rupee. Let's say in our terms, it's not only dollar to rupee, it can be any currency. But from Indian perspective, I'll always say that the world currency presently is dollar. Okay, so dollar to rupee rate. Okay, this is the main part over here. Now, can anyone tell me what is this dollar to rupee rate called as in India? Is it direct or indirect? Who can give me the answer over here? Is this rate direct or is it indirect? Who can give me the answer? Dollar to rupee rate is direct or indirect? Everyone? Correct, it is direct. Okay, so this exchange risk is mainly related to dollar to rupee conversion. So it occurs due to fluctuations in the exchange rates. Why does the fluctuation occur? Because of the main reasons for fluctuations are the interest rates in the countries. Interest rates. Okay, interest rates. These are the main reasons for fluctuations in the country. Okay. Also there are other long-term reasons also. Who all can give me the other reasons? What all are the other reasons for fluctuation of the forex reserves? Everyone, type in the comment section. What all can be the other reasons? Everyone. Yeah. Interest rates is one of them I gave you. Second is correct. Political situation. Very good. Political situation is another reason for fluctuations in the currency exchange rate. Okay. Okay, so these mismatches either hurt me or they are in the favor of mine, right? If the currency rate, if I have purchased some, let's say dollar, okay, against the rupees, and if the dollar rate increases tomorrow, then I'll be in profit because I'll sell the dollars then in that case, isn't it? Second is the settlement risk. What is settlement risk here? This risk arises mainly, I'll give you some logic behind this first, then we'll read it, okay? Let's say you are in US and I'm in India. Okay, we are dealing something in something. Now what happens? The problem with US and India is when we have a day in India, there is night in US. Okay, US is always almost 11 to 12 hours later than us. Means whenever we have roughly whenever we have 12 or 9:30 in the morning over here, then they have around 11 p.m. at night. Okay, so what happens whenever I am working for a day? If I want to transfer you the money, you are in US, I want to transfer you the money and I transfer it at, let's say, 80 rupees per dollar. Okay, at, let's say, 12 p.m. as per Indian Standard Time. So at that time in US, what is the thing going on? It is 10:30 night roughly. Okay, so I transfer it, but you will be working tomorrow morning only when you go to the bank. Okay, when you go to the bank tomorrow morning, so whenever you will go to the bank in US, okay, it will be what time over here then? Okay, it will be roughly, if your bank starts at 10 a.m. in the morning, it will be around 11:30 night in India. Okay, roughly, plus or minus here and there. So now the problem over here is there is a gap of around 7 to 8 hours. Okay, 12 p.m. I had transferred and it's around 10:30 p.m. you will be going into the bank. Now the problem over here is, in this is, within the 7 to 8 hours, if Russia usually bombs Ukraine, in these 8 hours only, or there is a sudden outbreak of some COVID, news comes in, again some new COVID, then what happens? I transferred you at a rate of 80, but immediately the rate shoots up at what rate? 80 goes to around 83. So 3 rupees difference. 3 rupees is a huge amount. Okay, if I am transferring some bigger sum. Okay, so that's why this time fluctuation is called a settlement risk. Leads to settlement risk. So settlement risk is the risk. So basically, have you understood this settlement risk? Type yes in the comment section if you have understood the logic behind this. The time duration gap. Okay, got it? Move ahead. Okay. Settlement risk is the risk of failure of the counterparty due to the course of settlement during the course of settlement due to the time zone differences between the two currencies to be exchanged, right? Time zone differences. See, this main problem is of the time zones, okay? That is where one party performs its part of contract by delivering the currency to be delivered by it, but the other party fails before delivering the currency to be delivered by it in a different time zone, in a different time zone, okay? So this problem definitely occurs in all the currency trades, okay? Whenever we are dealing with two separate time zones, mainly remember settlement risk is due to the time zone differences, okay? What is the third risk? Country risk. Here, country risk is also has a subordinate clause, subordinate brother sister, that is called as sovereign risk. Sovereign, okay? Sovereign risk. So I'll just first cover country, then cover the sovereign part, okay? Country risk. It is the risk of the counterparty situated in the different country unable to perform its part of the contractual obligations despite its willingness to do so due to local government regulations or political or economic instability in that country. Means what? Let's say I am in Afghanistan, okay, and you are in India. You sold me some products and I have to give you the money. We have a long-term relationship, very good relationships, okay? Now the point is, I have to give you the money and I am ready to give it. But what happens? In the meantime, Taliban takes over. And then, let's say they say the no foreign currency should go out of my country. Let's say that. They won't say that. We don't know about it. But if they say that, no foreign currency should go out of my country, then even though I am willing to pay, but then also the political situation over there doesn't allow me to pay. So that is a problem that is known as a country risk. That's why there is a rating for various countries, the political situations over there, and it's called as a pestle analysis actually. Pestle, okay? PESTEL means political, economic, social, technological, environmental and legal, okay? Now what is sovereign risk then? Sovereign risk is similar to that of the country risk, only the difference is this is related to states and country risk relates to the whole country. For example, in India, the country risk relates to whole India as a country. Sovereign relates to various states of the of the country. Suppose tomorrow some state decides that no, we would be increasing the tax on so and so element, which is under the state schedule. Okay, so that becomes a state problem then. So that's why sovereign risk means it relates to state. Okay, so it is similar to country risk here. Sovereign risk is same as that of country risk, only it relates to states. That's the only part. Okay, so everyone got these risks. Everyone, what are the three risks now? Tell me before going ahead. Tell me what are the three risks which we have covered. Everyone, type fast in the comment section. What are the three risks? Exchange risk, correct. Exchange risk. Second is, what was the second risk? First one was exchange, got it? First one was exchange, correct. Second is settlement, correct. Settlement risk, right? And third one is country risk, got it? Move on. Chalo. Before moving ahead, understand there is a felicitation ceremony arranged on 8th of January 12 p.m. It is for those students who have cleared JAIIB, CAIIB in November, December 22. Everyone who has cleared it in November, December 22 should attend this program. It's on 8th January 12 p.m. Venue is 2nd floor, Tower A, Unitech, Cyber Park, Sector 39, Gurugram. So everyone attend this. If you are having some friends who have cleared it in November, December, JAIIB or CAIIB both, okay? So tell them. Many of you might have cleared it because you are in CAIIB. You might have cleared JAIIB just now only. So do attend it. Adda 24/7 will reimburse your 3-tier tickets on both sides, coming and going. Okay. The link is given in the description box. So definitely join this program. Okay. Click on the this pinned link is pinned comment is given. You can check over there. Okay. Let's come to the questions. Which of these statements is false? So which one is false? You have to tell me. Let's call this A, B, C, D. Okay, A, B, C, D. Okay, so let's call this A. Let me write A, B, C and D. Okay, yeah. The forward exchange rate is a good predictor of future spot exchange rate. So forward exchange rate, does it predict what can be the possible future exchange rate? Sure, it's a predictor always. Okay, you can't surely guarantee that this will be the rate only. Means I can just judge. So is forward exchange rate the good predictor of the future rate which is coming for dollar and rupee? Number one. B, the forward exchange rate and the future spot rate may not be the same. We want it false. Okay, so that's what I said just now. B, when I said over, you can predict, you can't definitely confirm that this will be definitely the rate. No, you can't do that. So forward exchange rate and the future spot rate may not be the same. Is it false or true? Suppose if I predict that after 3 months the dollar rate will be, let's say, 90, and after 3 months, actually after 3 months, it may be 91 also, it may be 89 also, because I am predicting right now, looking at the conditions. So this is the meaning of this B. So is B false? It is true. Okay, type fast. Is it true or false? B. B is true. What about A? Is this true or false? The forward exchange rate is good predictor of the future spot exchange. It is true. It can be a predictor only. It can't guarantee anything. Okay. Third one. The forward exchange rate is an unbiased predictor of future exchange rate. So, is it unbiased or is it biased? Biased means what? Biased means towards somebody, means liking towards somebody. The forward exchange rate has nothing to do with anyone. Okay, it just look at the pestle analysis, political, economic, social, technological, economic, environmental, and legal. It just checks these, checks what are the views of all the traders as well as the middlemen. Okay, and based on that, it gives the ratings. The rate comes up. Nobody gives the rate directly over here. Okay, in the market, it's a free market. So this is true or false? It is true, correct. It's unbiased. The spot exchange rate is a good predictor of the future exchange rate. Oh, spot means, what do you mean by spot? I've covered this separately in the video, spot and future. Okay, so spot exchange rate, can this predict the future exchange rate? Means right now the dollar is at 80. Can I, without looking at any other data, can I say that okay, after 3 months it will be 82? Or after 3 months it will be 75. Can I say something like this? Correct. So this is correct. False. So this is the correct answer. Which one is false? D is the false one. Okay. Clear? Got it, everyone? See here, all these A, B, C are also important for you to understand. Got it? The objective of the central bank is, so what is the objective of central bank? Let's see this again. I'll write it A over here. A, B, C and D. Okay, so objective of the central bank is to ensure that the country's balance of payment remains in equilibrium. So is this the objective of country, this central bank? Means to see that the balance of payments is in equilibrium, to accumulate foreign countries' foreign exchange reserves. Just go on accumulating foreign currency reserves, to ensure the implementation of country's exchange rate policy, and to control the international trade. So which one is the correct answer for this? Here, out of these I will say every answer seems to be correct for you, isn't it? Many of you might be feeling yes, to ensure that the balance of payment remains in equilibrium. This is what the central bank, RBI, central bank means RBI. RBI should look at this, right? To accumulate the country's foreign exchange reserves. So go on accumulating. It's also a job of RBI. To ensure the implementation of country's exchange rate policy. So that is also a job of RBI. Control international trade. That also you'll feel correct. So what should be the exact answer of this? A, B, C or D? I'll give you the reasons for this. Okay, the correct answer is, many of you have given me the answer as A, balance of payment, but the correct answer is C. Also some have written this D. No, correct answer is only C. to ensure the implementation of country's exchange rate policy. That's the only job of RBI. Balance of payment, to ensure that a country's balance of payment remains in equilibrium. How can it ensure it? Okay, RBI is, what is RBI? RBI is just a bank. It can give what is the current balance of payment is, whether it's in deficit, whether it's in the surplus, but it can't control. It's the human being, the companies in this country which have to control it, which if they export more, then the balance of payment will be favorable. RBI can just give the this ups and downs in that currency, right? But it can't control it. Secondly, to accumulate countries' foreign exchange reserves. If tomorrow, if RBI goes on increasing the dollars with them, will RBI do this? Just go on buying the dollars. It's wrong on the part of RBI. Okay. So it can't accumulate these forex reserves. Tomorrow if it accumulates dollars and dollar rates falls, then. Thirdly, control international trade. Nobody can control international trade in this world. Okay. So the correct answer is to ensure implementation of country's exchange rate policy. This is the only job which RBI can do, at least in this forex. Okay. The exporter should necessarily submit the export documents to the bank whenever any export is done. So this exporter needs to submit the documents within what? Number A, 15 days from the date of documents, 15 days from the date of shipment, 21 days from the date of documents, and 21 days from the date of shipment. So what is the correct answer? A, B, C or D? Everyone? Yes, it is. It is? Yeah, it is D, 21 days from the date of shipment. Okay? Always remember, what do you mean by this? See here, whenever there is any exporter who sends the goods to USA or any country, okay? So whenever they ship, the ship which is there, whenever this ship leaves this port, this is the Indian port, okay? Indian port. Whenever this ship leaves the Indian port, so that is called as the date of shipment. When the goods are loaded on this board and the ship leaves the port, that is known as this date of shipment. So from the date of shipment, from this date, the seller needs to submit these documents. These documents means which documents? Invoice. See, I'll write it over here. Invoice, right? I have covered this many times. Invoice, insurance, right? Insurance. Third, draft. Draft means bill of exchange. Okay, draft. Third, BL, bill of lading, means this ships. Okay, bill of lading. Fifth one is packing list. Can anyone give me packing list? And which is the sixth document? Packing list. Okay, give me the sixth document now. I have given you the 5 documents. Which is the sixth document required in international trade? Everyone. It is COO, Certificate of Origin. Correct. COO, Certificate of Origin. Very important. I have covered this separately in various videos. Okay. Follow the videos over here. Okay. Yeah. Chalo. Out of these, okay, let me ask you one more question. Out of these, which of them are negotiable? Can anyone write it in the comment section? Which of these are negotiable? Only negotiable. Negotiable means it can be transferred. Rights can be transferred from one person to another just by signing. Type fast. Is invoice negotiable? No. Is draft negotiable? Yes. Is insurance negotiable? What do you say? Yes. Is bill of lading negotiable? Yes. Is packing list negotiable? No. Is COO negotiable? No. Okay. So this is an extra part which we are dealing is here. I have covered this in my earlier videos also. That's why I am saying follow this series till the end. Everyone, those who have not liked the video up till now, just watching it, like the video ASAP. Type in the comment section if you have understood these concepts. Okay. Type fast in the comment section. Yes. Okay. Okay, the multinational company encounters the following exposure to foreign exchange risks. So any multinational company will find which foreign forex risk: translation, economic, transaction, and all of the above. The multinational company, mainly it will encounter which type of risk. Multinational means what? That country which is in various countries. Okay, the company which is in various countries. Okay, so it will be faced with which type of exposure? Translation. Okay, what is translation exposure? Translation exposure means, if let's say I am State Bank of India. Okay, SBI. Let's say I am SBI and I am in India, right? But I also have a branch in US, SBI USA. Okay, USA. So on 31st March, I'll have to bring, let's say, one more SBI UK also. I'm having it. Let's say, okay, SBI UK. I'm having in various countries. One more country, anything it can be. Okay. So on 31st March 31, okay, means 31st March of any year, SBI will have to give the balance sheet of its. So while giving the balance sheet, it will have to give the balance sheet of all its subsidiaries in various countries. So all these balances which are in dollars over here, dollar, and this is in pounds, right? And this might be in yen if it's in Japan. So all the currencies need to be converted to rupees as on 31st March, and that needs to be submitted to RBI, right? So this is known as translation risk. Whenever you convert the balances of any branch of any company which is situated outside your local country, okay, so that conversion is a notional conversion. It's not an actual conversion. It's just a notional one. So this is known as a translation exposure. Got it? The role of hedging agent is, what is a hedging agent basically? Hedging agent means it can be a hedging officer also. Agent it doesn't mean only agent. It can be officer also, an employee also in that company. But who suggests the hedging? What is hedging means? How to do the hedging to any company? So what is the role of that hedging personnel, we can call it? So assist the firm in determining which foreign exchange transaction is to be hedged, right? So whether, if let's say Reliance is doing almost 100 forex transactions per day. So does it need to hedge all the transactions? What do you mean by hedging basically? Anyone tell me what is hedging in the comment section? What is hedging? Hedging means, in simple words, covering the risk. Covering the risk, that is hedging. Okay, I'll write it over here. Hedging means covering the risk. Cover risk. How to cover the risk? By booking forward contracts in forex. Okay, forward contracts. So that is a part of hedging. Okay, and second is assist the firm in determining the terms of the currency or interest rate swaps. So interest rate swaps is one of the method of hedging the forex. Okay, so either A or B determine which transaction is to be hedged, and determining the terms of the currency and the interest rate swaps, both A and B, and none of the above. So what is the answer for this? Either A or B or C. Let's call this A, this is B, this is C, and D. So what should be the answer? Yeah, A, B or C. Definitely it should be C, right? The hedging agent or the hedging personnel should assist the company to determine which currency is to be hedged. Number two, it should tell them what are the conditions of the interest rate swaps, right? Otherwise the company will go in a problem later. So now these are the two new batches for CAIIB, just now started. Now I'll tell you about the discounts here. We'll be covering, let's go to Adda 24/7 live. Okay. Now on Adda 24/7, when you go live over here, I'll just show you. Hold on. Let's go there. Yeah. If you are having the app, I would suggest go for the app. Why? Because app will give you 1% extra discount on coupons. Okay. So we are on Adda 24/7 live over here. Click on JAIIB and CAIIB. Now you'll see this. See this JAIIB, CAIIB Mahapack, CAIIB 23, JAIIB 23. Click on CAIIB 23. Okay. Once you click on CAIIB 23, see this. You are getting CAIIB English and bilingual. So click on this English batch. Okay. One sec. The page isn't working. Hold on. Click on, let me see. CAIIB English batch, let me see. Oh, net. One sec. See this. I'll show you about the bilingual also. Same thing. See here, click on this batch. You'll see the details of the batches, right? Details of the means this what are the various aspects to this, means what all are the recorded videos. Here important parts are recorded videos 24/7 are available. Means if you miss the class anytime, then also you can get the classes back using the recorded sessions. Also, two-way interactive classes are there. You can ask the questions anytime, okay? Then ebooks are available. Also, now look at this fees part, 23.99. Click on view offers. Put the code Y432. See this. Put the code Y432. Click on apply. Okay. See this. 23.999 now reduces to 5519. 77% off you are getting. So go for it immediately. Also, I would suggest instead of going for a single batch, why not to go for a multiple batches in a single payment? Okay. So for that you have to go to Mahapack. Click again, go to the home page. Then click on JAIIB CAIIB Mahapack. In Mahapack you will see all three Mahapacks over here. Click on CAIIB ka Mahapack. Okay. Once you click on this, you will see the details again. 15 plus batches for ABM, BFM, ABFM and BRBL. 15 plus batches means what? Even if you attend the batch, each batch once also, then also you learn the subject, isn't it? So live classes for more than 500 plus hours. I'll give you the important details over here. The live classes for more than 500 plus hours. Then structured for CAIIB 23. Case study batches are available separately. Then ebooks are available. Recorded videos are available 24/7. You can go on reading. Okay, it's at your take your time. Now look at the fees part, 35,996. Click on view offers. Put the code Y432. Y432. Never forget this code. Okay, click on apply. See this. Now the fees reduces from 35,996 to 8,279. Again 77% off. Go for this Mahapack. Why am I stressing on these batches? Because the portion for CAIIB has changed. Okay, what is the new portion? Look at this. The new portion for CAIIB is ABM, BFM, ABFM and BRBL. ABFM means these two subjects have been added newly. Okay, ABFM and BRBL. AB and BFM were already there, but they have also been changed. Okay. Now the electives also rural, HR, IT, central banking and rest. There is no retail elective now. Negative marking. There is a negative marking scheme which has been introduced in May 23. Also there are subjective questions, means you'll have to solve the case studies this time. So that's why you'll be needing a guide for this. Join these batches. Tomorrow I'll be back with another session. Till then, bye.